Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Analyst at GDMFX with the morning outlook. Starting with the economic calendar, there is nothing much happening today as to fundamental news. Therefore, whatever we see on the technical charts, only technical trading today. The dollar right now what we see heading for its biggest weekly decline versus the yen since April, before the Federal Reserve Chair Janet Yellen testifies to lawmakers next week, and its traders are trimming bets that the central bank will raise interest rate. Now, a gouge of the dollar was poised for its fourth weekly loss in 5 weeks, as minutes of the Fed June meeting failed to provide additional insight of the pace of the rate increase and whether or when that is going to happen. The yen approached a 5-month high versus the euro as well, after a Portuguese bank company missed debt payments, boosting heavy assets. The euro snapped a 3-day climb versus the dollar as well, as Portuguese banking company raised concerns the region's economy remains vulnerable to shocks and it emerges from the sovereign debt crisis. Now, also a little bit more about the euro. Briefly paired losses yesterday after the European Central Bank officials said there is no urgency for additional steps to support the economy. Moving forward to Great Britain, it is halfway to recapturing its boom days before the 2008 financial crisis that blew up its banks. Now, by looking at the chart, it shows the GBP is approaching the level of $1.7332. That is the point at which it will have recovered 50% of the slump sparked by the credit crunch. Yeah, so that led to the worst British recession since the World War II. And of course, the Bank of England pumping billions into £1 billion into the economy. Shaking the financial system. Also, the pound's turnaround is being expected by speculation on the UK economic recovery is stronger enough for the Bank of England to raise interest rates for the first time since the crisis. Pressures central banks across the globe to cut borrowing costs. Now, let's take a look a little bit in the commodity sector. What we see, gold is holding a 4-month high. Heading for the longest running run of weekly gains since March, as concerns Europe's economy remains vulnerable to shocks and rising tension in the Middle East is boosting heavy demand. Also, what we saw yesterday, the metal breaching the resistance level of 1333 and achieving our targets at 1342, now is set for a correction to retest the upper level of the recent broken sideways range, from where we might see even higher prices, close to 1362, based on a weekly chart, of course. Now, West Texas Intermediate is heading for a weekly drop as Libya boosted its crude oil output and gasoline stockpiles expanded in the U.S. Right now, what we see, the prices are moving around $102.60 per barrel, remaining below the 50 level of the relative strength index, signaling further downside is possible for today. That's all for me. Thanks for watching. Bye-bye.